Hello everyone, this is a weekly outlook for GBP, JPY, GBP, USD, and gold. As always, we will review the current fundamentals and specific fundamentals that we will be looking out for in the SharmaFX group throughout the week. We will then move into the technical analysis for position trade opportunities, swing trades, and scalps. So let's start off with the anticipated news around the lockdown in the UK. Today, Boris Johnson announced the UK lockdown will be extended for additional 4 weeks. The anticipation to lift the restrictions was towards June 21st, but now it has been extended until July 19th. This is due to the Delta variant that was initially discovered in India, then the rest of the world. The cases in the UK have been increasing since the discovery of the variant in the country, and we have seen the sentiment from Johnson in the weeks leading to today. He has expressed his concerns around opening the economy too soon compared to what the evidence was showing. However, he was still pressured by his officials to work towards opening the economy by June 21st. And that was because of the fear of extended lockdowns and what the impact will be if the lockdown was extended onto the economy and onto the labor market, and also any of the jobs that are starting to already move out of the UK and into the EU. So Boris Johnson still continues to push the positive sentiment by stating that he is confident the economy or the country will not need more than 4 weeks and it will reopen. As we continue down, we see that Boris Johnson is saying the situation will be reviewed on June 28th to make sure that the recovery is stable as the vaccination programs start to accelerate. Hence, the investors are not too concerned, but instead are showing optimism only because it's merely 4-week delay and the economy wouldn't have been at pre-pandemic levels in 4 weeks anyways, if it were to reopen right now. So as long as any further delays are measured in weeks rather than months, the COVID-19 probably won't leave a big scar on the size of the economy. There is clearly a risk that July 19th anticipation of lifting restrictions may be delayed again. But this is bringing the optimism because clearly we are seeing efforts being made by the government to contain the virus and ensure that if the country does reopen, then those measures will be irreversible, meaning they won't have to go back into a lockdown. At the moment, we see 2 vaccines that are helping patients stay out of the hospitals, which are Pfizer and AstraZeneca vaccines. Pfizer is seen to be 96% effective in helping against the hospitalization after 2 doses, whereas AstraZeneca is 92%. The UK authorities are aiming to vaccinate their population, at least with the first dose, by the end of June, which is a month earlier than anticipated. They're hoping that the second dose will be enough to help the country and economy overcome this final hurdle of the surge in cases to reopen the country without any serious repercussions. As we continue down, as of June 12th, 46.1 million adults have already received their first dose, and 29.8 million of those have already received both of the shots. As we continue down, we see that after this final stage, the social distancing rules will be removed, nightclubs will be open again, and the indoor venues can be reopened to full capacity again. So clearly, we're starting to see this optimism surrounding the delay in lifting restrictions. And we are seeing a clear effort being made by the UK government to make sure that if they do open this time, they will not have to go back into a lockdown. Let's get into the economic calendar for the week. So going into pre-London session today, we have claimant count change and unemployment rate. This is what I will personally be watching out for going into the London session. Usually when you have some important news coming out in the pre-session, whether it's pre-London, pre-Asian, pre-New York, always let the first 15 minutes of the market open kind of price in the fundamentals. And that's where you're going to see some volume kicking in and a little bit of volatility. After that, going into New York session, you have Governor Bailey speaking. This is another important fundamental that I personally will be watching because he's going to be talking about the future growth of UK-based financial services. This is important because the financial services sector in the UK has taken a huge hit because of Brexit. And I want to see if he's going to mention anything about London. London accounts for 40% of UK's economy, and the investor sentiment around London's economic growth at the moment has been that if London does not recover, then the UK as a whole will not recover. So London's recovery is very essential to the UK's economy as well. As we continue down, you have core retail sales, PPI, and retail sales. So those are a couple of other things that you want to watch out for 15 minutes after Governor Bailey's speech. After that, you have a pretty easy New York session. You do have some fundamentals coming out, but you could probably grab some volume and volatility because of the fundamental support. Again, going into tomorrow, you have a pre-London heavy session where you have CPI news coming out. So this is definitely something that you want to be watching out for, whether you're trading GBP USD or GBP JPY, because CPI, regardless of whether it's GBP USD, JPY, or whatever it is, whatever currency that you trade, if you have CPI news coming out, that's going to account for majority of the overall inflation in that country. So you definitely want to pay attention to what's happening with the CPI numbers. So again, we're going to have the first 15-30 minutes of London Open with some volume, with some volatility. So that's what we're going to watch out for. And then after that, we do expect the volume to die down a little bit, maybe an hour, 2 hours into London session as the markets start preparing for the interest rates on Wednesday during New York session. So you have interest rates coming out of USD, but the most important thing to pay attention to is the FOMC statement, because that is where the central bank is going to tell us exactly what they're looking for, what is their outlook, what is their sentiment around the current economic conditions, and what is a couple of things that they're going to be looking into to make any further decisions about their monetary policy statements. So that is what we're going to be watching out for. As we continue down, you're going to see a little bit of a drop into the volume until Asian session when you have Aussie news coming out. As we continue, every Thursday we see unemployment claims coming out. So this is something else that I'll be watching out for. And then as we continue down into Asian session, you have Japanese policy rate coming out, which is interest rates. So this is where Bank of Japan is going to be discussing the same exact things. What is their current sentiment on the economic situation right now in Japan? What are their outlooks? And what are the couple of things that they'll be watching out for to make any further monetary policy decisions? So what are they looking into to make any changes there? And then Friday, you have a pretty relaxed day. I don't expect much to be happening on Friday. With that being said, let's go into the technical side. So I do have some fundamentals written out for you guys for every pair that we're going to be analyzing. So if you do kind of get confused when it comes to fundamentals, just take a look at what's coming out this week and what are we watching out for. So on the yearly time frame, what we have is the resistance here being broken on the yearly time frame. Finally, we break out of that. We're continuing bullish. This is that 152.300 mark. As we continue bullish, we're coming up to fill the wick. I believe we have about 50 to 100 pips left or so. We're coming right into the zone of 156.900, or you can round that up to about 157, which is what I will be doing. So right into that 157 mark is what we're coming back up to. As you can see, there is this little zone that price has tapped into and it keeps grabbing liquidity from. And then it dropped all the way down in about 2011 and 2012 when it started its recovery again after the financial crisis, the global financial crisis drop. So this is an all-time low that was created at about 119.500. We continued bullish. Once we broke out of this liquidity area, price continued for approximately 6,000 pips. So around 5,500, if you count the top of the wick, around 5,800. So approximately 6,000 pips is what this entire bullish move up was for. Then around 2014 and 15 is when Brexit was introduced into the UK and into the EU. And that is the new high that price made. Around 187 is what I'll be rounding this up to. We had to drop back down, and even during COVID times, we came back, grabbed some liquidity, and then we have some great growth happening right now for this pair. So the first target is 157. Once that's cleared out, then another area that I will be targeting as a position trade opportunity, it's going to be right into this area of 163,500, where you have that top wick rejection back from 2009 and a bottom wick rejection from 2014. And then after that, you just have a massive sell-off happening. Let's drop down to the quarterly time frame, keep our fundamentals here on the side. So on the quarterly time frame, we have price making a massive bottom wick rejection, actually rejecting this previous resistance level that it finally broke out of, right into this area of 149 flat. And if you take a look right into 149 flat, you have consolidation happening. You got some resistance being formed right into this area. We make a bottom wick rejection. We're continuing bullish. At this point, there's not much stopping it from continuing up to 157 flat. So we have about 171 pips left from current price up to 157 flat. Once that is broken, then we're continuing up to 163,500, which is about a range of 600 pips or so. And then after that, there's really nothing stopping price from coming back and revisiting the highs of 187. From a fundamental perspective, we're going to need the UK lockdown to be lifted. We're going to need to see the Delta variant cases decreasing, any COVID-related cases decreasing. We want to see people getting off of unemployment. We want to see the CPI numbers coming out in favor of the economy, so inflation kind of slowing down a bit, and we want to see what Governor Bailey is going to be saying over the course of a couple of months to maybe even years until we start coming back into this 187 mark. So not even Governor Bailey, let me correct myself, but the Bank of England in general. We want to see some strong contractionary monetary policies coming out that's going to show us the strength of the pound for it to come back and revisit 187. Looking at the monthly time frame, let's bring that down for you guys to see again. So on the monthly time frame, what you have is you have this entire zone that price keeps rejecting for a very long time until we finally break out of it. You get your classic break and retest. Price continues bullish. Now we're coming back and we're tapping into this resistance zone that price is rejecting at the moment. So as you can see, we're kind of fluctuating between this bearish pressure and this bullish pressure. We're tapping into the previous resistance, but I do think that we will have enough optimism from the investor side to continue back up to 157 flat. On the weekly time frame, we are seeing that playing out at the moment. So you could use trend lines and all of that as supplemental tools. That's what I use. I use it to visually show you guys and some of my team members here, my group members of SharmaFX. I use this to visually show you guys what the structure is like. So on the weekly time frame, what we have is price making a massive bottom wick rejection back in March, pushes back up, creates a new high. We come back down right into that liquidity area from the quarterly time frame, and after that we see price continuously making higher highs and higher lows. But after the last test of the structure, we've been massively bullish. You have a little bit of break and retest right into this zone, and if we take a look at the bullish run since about January 2021, after the last test of structure back in December, price has ran up for about 1,000 pips before it started doing any sort of retracement. And then after that, we've run up for additional 600 pips. Now we're seeing a little bit of a pullback, and now we're seeing price this week. We're seeing price continuing bullish and breaking above the previous weekly high. So we're seeing that break happen right now. When you go onto the daily time frame, you'll start to see some minor levels that you can mark off. So at the moment, what I see happening here is price breaking above this consolidation area, creating a support right into that 154,700, continuation up. Now what I want to see is the high up top here being broken. That will give me a confirmation that we are not getting stuck in a consolidation zone here. Once price breaks the high, then it's going to start off as a scalp opportunity that we can take, and we'll see how you can do that on the 4-hour time frame. But it'll start off as a scalp opportunity for about 40 pips or so. Go risk free, and at that point I do expect to see some sort of break and retest on maybe the 4-hour or even the hourly time frame to continue up to 157 and tap into 140 flat. For that to happen, let's go back and bring our fundamentals back. But for that to happen, we need to see some positive news coming from GBP. And also we want to make sure what's happening with JPY. So if JPY, they decide to maintain low interest rates, but we start seeing positive numbers or strong fundamentals coming out of the pound, then I do think we will gain the strength to continue up to 157. And any break above that, we need to see some positive news coming out. So maybe some positive data when it comes to Delta variant cases, maybe they're decreasing. We're starting to see evidence of that. We're starting to see the vaccination programs being effective. We're seeing that a lot more people, they're gaining their second dose, and pretty much a good, strong outlook on the UK economy is what is going to help us break past 157. If not, there's a very high chance we probably will stay around this area until the market from a technical perspective collects orders and gets ready for some strong fundamentals if we are to break past 157. If we see by July 19th that there's going to be an increase or maybe a further delay into the lockdown, Delta variant cases are increasing. We're seeing a lot more people on unemployment. CPI, numbers are increasing. We're starting to see a lot of inflation, and there's not much of an optimism from the central bank. Then there's a very high chance we can come back down to revisit 152, 300, or maybe even 149 flat. But for that to happen, we need to see some negative fundamentals. But right now, we're seeing some positive sentiment, even though the UK lockdown has been extended. So that tells us that the market has a ton of bullish sentiment when it comes to the pound and especially to this pair at the moment. Let's go ahead and move on to GBP USD. So on GBP USD, I have some fundamentals lined out for you guys. As we drop down to lower time frames, we'll see how some of these fundamentals will come into play. But what we're seeing right now is price made an all-time low back in 2016. Again, this was the time when Brexit was introduced into the EU and into the UK. So around 1.235 is where we made an all-time low. You see a ton of consolidation happening here. So the first time price closed above this area was in 2016, and we did not break above it until 2020, where we closed bullish. And this year we made a bottom wick rejection right into that consolidation area to continue bullish, as you can see right here as we close it off. So this is at 1.35 area. So after price rejects 1.35, we're continuing bullish. We're coming back up to fill the wick. We're coming back right into that support area of about 1.38 or 1.438. 1.438, we're coming back into this zone, tapping right into this area. And the next stop from the yearly time frame perspective is that wick fill. Once that is cleared out and you're looking for position trade opportunities, the next stop is 1.656, right into that consolidation where you saw a ton of volume follow right after. So once price broke out of that consolidation, which was around here, price dropped down for about 3,000 pips. Let's drop down to the quarterly time frame. So on the quarterly time frame, you see a ton of liquidity being trapped here. You see a support being made here. Finally, as we continue bullish in July 2020, you see a massive push up for almost 1,800 pips. But I want you guys to notice one thing specifically. Price has not broken past the previous quarterly high here. So you have the previous quarterly high that tapped right into this top wick rejection area from 2018 time, 2017, 2018. Price tapped right into that area, and that's the same exact area that price is tapping into right now and rejecting as we're pulling back down. So that tells us that right now there's a very strong battle on lower time frames that's happening between the pound and the US dollar, and we need to pay attention to these fundamentals this week to make sure that we're on the right side of the trend. So from the yearly time frame and quarterly time frame, we're quite bullish. There's no doubt that we will be breaking past 1.438, about 1.4 area flat very soon. But for that, again, we need to see some of the strong fundamentals here, and we need to see the pound overpowering the US dollar when it comes to fundamentals from a macro perspective. On to the monthly time frame. So again, you have all these fundamentals here to the left. So from the monthly time frame, I'm going to go ahead and adjust this zone, bring it down a little bit instead of trying to create another zone. So from a monthly perspective, you're coming right into that resistance zone where market collected orders, major top wick rejection before a nice bearish volume to the downside, coming back down to this 1.235 area where you have a ton of support being formed. So we're right into that area at the moment. Another thing that we want to watch out for is this little support that was formed here before price pulled back. That's right through that consolidation. That's right through that resistance that price made. And we closed above last month, 1.39 or 1.4 flat, any of those. So we closed very bullish this month. We made a little top wick rejection. We're coming back down, it seems. And as you look to the left, you get further confirmations of it being a strong level. So as we drop down to the weekly time frame and you're looking for any position trade opportunities, you want to make sure that the trend here is being respected. So as long as we can come back down and kind of maybe tap into this area, we're going to grab liquidity, respect structure, and then continue back up bullish. So the move that I'm looking for here specifically is going to be a downward movement first, and that may have been assisted by the lockdowns being extended. So maybe a pushback down into this area of 1.39, 1.4 flat, and then a continuation back up as we start to see, as we inch closer to the interest rate news that's coming out this week from the US dollar. So we want to make sure that we're paying attention to any FOMC statements where they're talking about tapering and inflation specifically. We have unemployment claims coming out that might help us with this move here as well. But specifically want to pay attention to interest rates, and we want to pay attention to CPI that's coming out of the UK and Governor Bailey's speech that are going to be coming out this week. So any of those data are going to be helping us push back down into this 1.39 area simply to grab liquidity and then continue back up from there. So really the zone that I'm looking for specifically is price going to tap into this area here to grab some liquidity, test the bottom of the structure, the low of the structure, and then continue back up bullish. And that is where our buy opportunities are going to be, continuing up to 1.438 for about, so somewhere here, continue back up for about 300 to 350 pips. 300 to about 350 pips. Let's drop down to the daily time frame. So right now, as you can see, the market is still collecting orders. We are still in this little bit of consolidation that is being formed right about here. So now this is when we're going to start to narrow down into some swing trade opportunities, narrow down into some consolidation areas. So 1.41 is where we have all this consolidation happening. What we do see, if you pay attention to details here, is price continues to reject sort of a resistance area. So this tells me that there's a very high chance that very soon, this is the resistance area that price keeps rejecting at the moment. So this tells me that very soon we might have some nice sell opportunities to the downside, but we want to make sure that all of these lows that are being formed by these wicks, as you can see, these are some lower lows that are being made by the wicks here. I want to make sure that these wicks are filled. I want to make sure that this daily wick here is broken, and then continuation down, at least to fill the wick after this wick here is broken. So fill the wick down here for about 62 pips, and then continuation down completely risk-free about for 100 pips or so, continuing down to about 160 pips at 1.39 flat. So I want to make sure that this last daily wick here is broken. If it is not, then we're going to be stuck in this area until we start to see some positive fundamentals coming out of the pound, maybe CPI news being favorable, or our claimant count tonight being favorable, and then also interest rates as we get ready for that. So you have a ton of fundamentals when it comes to GBP, USD, GBP, JPY that are going to help you with some of these movements. And then even on the 4-hour time frame, simply a mess. As you can see, we've just been consolidating. So probably we're just getting ready for that claimant count So perhaps we're just getting ready for that claimant count to come out, and also the CPI news, and that's going to help us move to the downside, with probably additional support coming from Governor Bailey's speech when he talks about the future growth in terms of the financial sector of the UK economy. But the most important fundamentals to pay attention to for this pair specifically will be the interest rates and the FOMC statement coming out of the US dollar. Let's go ahead and move on to gold. So for gold, we have some USD fundamentals that we will be paying attention to, and some JPY fundamentals as well. Looking at gold from a yearly time frame, you have that top resistance being formed back in 2013 and 2012, with also a major top-wick rejection in 2011. And this was that 1680 mark that we rejected earlier this year with that massive bottom wick rejection. Another area to count here is this top wick rejection from about 2012. As we drop down to lower time frames, we will see how price is reacting to 1800 level flat. From there, it's a continuation up to a current daily resistance of about 1900. So as you drop down to lower time frames, you will also see a ton of price action happening around that area. And then finally, the current year's top wick rejection. We want to see how price reacts around here, which is going to be the 1960 area flat. So these are top wicks, bottom wick rejection areas that we want to see being broken, being respected from over the years. So since 2011 until now, so over the past 10 years, these are some levels that we have seen price react to significantly. Let's drop down to the quarterly time frame. On the quarterly time frame, we see that price has created a support right into this area of 1680, about 1700 flat. After that, we saw price create another resistance area right into this area right below 1800, which we will adjust as we drop down to lower time frames. And then after that, the third zone that we've seen price react off of is right into that 1900 area flat. So the quarterly time frame simply confirms the levels that we have off of the yearly time frame. As we come down to the monthly time frame here, we see a ton of consolidation right into this area. Price comes back down, taps into that area, grabs liquidity from there, and a massive push up in the past 2 months or so. And the current month is tapping right into that 1900 area of liquidity, where you have massive wick rejections. You have two top wick rejections back in 2011, and we're pushing back down here a little bit. So another area that I would like to mark off here as we drop down to the weekly time frame is going to be that 1860 area, where we see price respecting this area as support, and then also as resistance before it continues back down bearish. So from here, again, a ton of liquidity. We're creating a massive bottom wick rejection at the moment. This week, we just started off very bearish already. So we're looking towards, from an investor perspective, market sentiment perspective, we're looking towards the interest rates that are going to be coming out of the US dollar, or the US, sorry, the interest rates that will be coming out of the US, and also the interest rates that will be coming out of Japan. Another important zone to watch out for is right into this area. And now we're going to drop down to the daily time frame. But before we do that, another important level is right into that 1860 area. And then we have this bullish structure that is being formed, currently being respected. So as long as we can come back down and maybe grab a little bit of more liquidity from about 1830 area, I think we're going to correct this entire massive move while still respecting this bullish structure, and then a continuation back up, or even right now, a continuation back up. So there are two moves essentially to continue this bullish structure. The first one is price rejects this area, continues back up bullish. We finally break out of 1900 flat, going up to 1960. The second move is price dropping down a little bit more, try to correct this entire bullish move into 1830. And then from there, we continue back up and finally grab some more momentum and enough volume to break past 1900 flat. If price breaks below 1830, the next stop for this gold is going to be continuation down to 1800, and that is going to be the break of the bullish structure that we have here. Let's drop down to the daily time frame. So on the daily time frame, we see same thing where price is creating higher highs and higher lows. We see price creating a low here, continues pushing up. That's the next high that it makes, consolidates here, collects orders, pushes back up again, creates a new high, same exact thing, consolidates, although it does make a bottom wick rejection, creating a new low. We push back up, create a new high, pulls back, creates a new low. Continuation up, you have a nice bullish rally, but you do see once we break above 1860, that price does start to exhaust out, creates a new high, consolidates a little bit here, and now we're starting to test structure down here again. So what I want to see is price either push back down a little bit more, come back down to revisit some of the highs and the lows that it's made here, and then a continuation back up after the tap of 1830, or price just respects this area even though it has already made a low, and then a continuation back up to 1900 and then 1960 flat. So those are some of the position trades and swing trade opportunities that you can look into. So as we drop down to the 4-hour time frame, what I'm looking at is a massive sell-off that happened as soon as the market opened up. So a massive sell-off that happened and then a pullback a little bit. You see a resistance being made here on a minor level right around here of 1870. So you see a resistance being made right at 1870, right around this area, and then a pullback down. You see a massive top wick rejection of 1870. You see the next 4-hour candle closing almost like a doji, and the current 4-hour candle comes all the way down, taps into 1860, massive bottom wick rejection, and at the moment we're sitting in a consolidation area. So there's a very high chance in the next hour or so that we could see a little bit of a bearish push down, and the next candle is what carries us down below to about 1850 or so. So to take advantage of any of these opportunities, I'm going to drop down to the 30-minute time frame. I'm going to look for some sort of break and retest on the 30-minute, 1 hour, and get the confirmation from the 4-hour. As price continues below this area, there's nothing stopping it from continuing down to 1830 flat. So you have a nice scalp opportunity that starts below 1860, coming down to 1845, and you can turn that into a day trade opportunity as it drops down to 1830 flat, and then you're going to start looking for some more buy opportunities if the support is held here and then a continuation back up. Then that's a nice buy opportunity, but if price breaks below 1830, then we're continuing right back down to 1800 flat. And for that, you need to watch out for any USD fundamentals. You want to watch out for any JPY fundamentals that we have here. So these are all the fundamentals that you want to watch out for throughout the week. Any USD news, any FOMC statements, unemployment claims, interest rates from Japan, and the BOJ statement. Other than that, I don't think there's any other fundamentals that will be affecting gold significantly. Maybe besides Governor Bailey's speech is what you could watch out for as well. So that's additional. But these are the major fundamentals that we will be watching out this entire week, especially in the SharmaFX group. If you guys have any questions, feel free to comment below. Let me know what you guys think about these weekly outlooks, and I will see you guys next week.